Welcome to Retirement Straight Talk with Paul and William, featuring award-winning financial advisor and former host of the Sunday Money Show, News Talk 1010, Paul Baraka, and his associate advisor, William Baraka. Creating and keeping wealth does not need to be complicated. Paul and William will cut through confusing and contradictory financial advice to give you the real facts to help you invest better and enjoy a worry-free retirement. The views and opinions expressed in this video may not necessarily reflect those of IPC Securities Corporation. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.
Hello and welcome everyone to episode 34 of Retirement Straight Talk with Paul Baraka. That's me and my certified financial planner associate William Baraka. And welcome whether you're watching us on YouTube or listening to us on one of the streaming services. Today we got a really fun program. We're going to talk about what everyone wants to talk about, and that's death. We're going to talk about the role of the executor, pitfalls and problems. Greatly misunderstood topic, by the way. We get questions on this all the time. And so we thought we'd spend some time on some of the basic things today, right? Well, what is an executor? Who should be an executor? Does the executor actually have to do their job? We're going to talk about, what if you don't have anyone you can name as an executor? Should you pay your executor? What about the potential liability? And a couple things the person writing the will and the executive really need to provide. Super, super, super important. If they don't do it, they're going to leave a mess for their beneficiaries. So why don't we start at the beginning, which is pretty simple. What is an executor? And Will, I think you got a definition there, right?
An executor is just a person, or it can be an institution, as we'll kind of get into more later, appointed by the person who draws up the will just to carry out the terms of their will after they've passed away.
Yeah, and in other words, the word testator can be a definition of the person who's made the will. So that's all it is, a person who has to take care of what the person who wrote the will wants done. And by the way, that can be pretty simple, or it can be quite complex depending on the nature of the circumstances.
Generally, Paul, who should be the executor?
Well, you want someone you trust, obviously. Often people appoint a family member, a sibling, a son, a daughter, maybe a close, whomever. Generally, though, you want someone your age or younger. Now, that depends on how old you are.
Yeah.
If you're 88 years old, you don't want to appoint someone your age. Probably not a good idea. So generally, your age or younger.
Because being an executor, I think a lot of people don't realize it's a lot of work.
Oh, yeah.
And like you said, there's also potential liability there for the person that takes on the role of the executor. So in addition to all those criteria you laid out, you don't just appoint someone to be an executor because you have to have a discussion with them, ask them if they're willing to do it, explain to them what's potentially involved here. Yeah. Because it could be, like you said, maybe you're a trusted son or daughter that you have, but maybe just they have so much stuff going on in their life, whatever it is, they have to deal with their own family. Maybe they have a medical issue, whatever it is. For whatever reason, maybe they can't take on the role. Or maybe you have a child who just isn't financially, I don't know what the best word to use, but they aren't.
Well, they should have some expertise in this area.
Yeah, they aren't the most well-versed in financial matters. There should be a basic level of understanding there if they are going to be your executor. So in addition to all the criteria you laid out, have that discussion with them, make sure they're willing to do it, because the executor doesn't have to do the job just because you appointed them, do they, Paul?
Well, that's a good question. They don't have to do it. Now, why wouldn't they want to do it? Well, you know what? Maybe you appointed your sibling, Joe, whatever, to do it. And the moment he needs to do the job, maybe he's got a sickness in his own family. Maybe his spouse just got cancer. Maybe one of his kids got in trouble. Well, he's got to focus on his own family. Then to throw this on him, you might say, look, I just can't do this right now. You never know what's going to happen. And that's why we always recommend that you always make sure there's a contingent or secondary executor. In other words, if the first one cannot or will not do it, there's someone else there that you appoint that can do the job. Because if there's no one there, well, then you get into a nasty situation where the government might appoint someone. And I don't know about you, William. The last thing I want is the government appointing someone to take care of my entire financial assets.
Yeah,
I don't think I'd want that.
With you there. Now, there are options, Paul. If you feel no one is up to the job, no one is capable or willing to do it, there are trust companies out there that you can appoint to do it for you. It makes sense, like if you have a very complex estate with shares of a private corporation, farmland, rental properties, etc. Maybe you have family and friends, but they live far away from you, so it's just not ideal because of that to do. Maybe your family has a history of infighting, so it just could be a way to help reduce tensions around the estate. There's obviously a cost that goes with it. These trust companies don't do it for free, but there could be definite value in there for the right situations.
Yeah, we've had situations where we've had clients saying, well, I have my brother, but he lives in Vancouver. Mm-hmm. Not very practical, or Montreal, or they live in Phoenix or some other country. Not very practical to have it done by someone who's not close. And you're close to, by the way, also. All right. Sometimes it's just worthwhile to pay a trust company. And there's trust companies you can set up ahead of time. In other words, you arrange it now. Right. And it's put right in your will. This trust company is going to do it. The arrangements have been made and they're paid. By the way, talking about being paid, it's often a good idea, even if it's a family member, to pay them. It's a lot of work. You know, you've got two siblings, one's doing all the work. They're going, hey, excuse me, I'm a little under the weather today. So now it's important when you pay the trustee, you don't say in your will, oh, for your services, we'll pay you X dollars. And by the way, executor can be paid up to 5% of the estate. Now, that's obviously something you can do. That could be a lot. But it's better if you say in the will that you're going to pay them for this work. Now that's taxable. The executor, well, you don't want that. You just leave them a little extra money. You say, okay, my brother Joe is doing the estate, and I'm going to leave him an extra whatever in the estate. You don't say what it's for. Just leave him a little extra. Then it's not taxable. Makes way more sense.
Yeah.
So another thing about the executor can have liability. Now think about this for a moment. The executor may make investments in the estate. Maybe there's an investment account, and they don't do very well. Well, you know what? You could be sued by one or more of the beneficiaries who could say, hey, you did a lousy job of this investment. You shouldn't have put it in this. I'm suing you, and you're liable. Or something else happens. There can be a lot of, depending on the complexity of the estate, there can be a lot of documentation. If there is a business or the will is not worded specifically accurately, and you make a distribution and someone can attack you and they're saying, well, that's not what the will says. Or that documentation didn't have a proper signature or whatever. You can be sued. Now, you can buy insurance, by the way, if you're an executor for this. And it's probably not a bad thing to do, by the way. So just be aware, the executor has liability.
Yeah.
It can be sued.
Another thing, Paul, like the CRA could even come after the executor if the estate isn't distributed properly. Like, for example, if they distribute the RSPs from the estate without a clearance certificate, and then there's still a tax liability in the estate, the executor, and it has happened, the CRAs come after the executor and they've been liable for it.
Yeah. By the way, that's really what probate is. I mean, people whine about probate. Oh, I don't like paying probate fees. And of course, no one likes paying it in their estate. But probate is there to essentially to say, yes, this will is authentic. So once a will's been probated, really the executor can be more comfortable saying, okay, it can be distributed this way. So in a sense, the probate can be there to kind of help with reduce the liability for the executor. By the way, finishing up, a couple things. If you are writing your will that you need to do to avoid leaving your beneficiaries a big financial mess, you need to put down on paper, call it an estate directory, whatever. You can call it whatever you want. It's a simple checklist of everything you have. Where's your bank accounts? What branch? What's the account number? Where's your safety deposit box? Where's the key? Where's your investment accounts? Where's the deed to all your properties? Where is this? Where is that? Otherwise, the executor is going to have a hell of a job trying to figure out where this stuff is. And by the way, something that's come up now new, what about your digital assets? Maybe you've got all your family photos on a cloud somewhere. Well, that could be lost forever unless you let people know, hey, here's all the family photos. There's the username. There's the password. Or maybe you have a lot of financial. I mean, I keep everything on the cloud myself now. You want to make sure if something were to happen to you tomorrow, that someone can access all that personal financial information. Super, super, super important. Call it an estate directory or whatever you want. There's a number of different names for it.
Okay, let's wrap up here, Paul.
Okay, so that's basically it for today. Again, just quickly, summary. We talked about what is an executor. We talked about who can be an executor. Does the executor have to do the job? If you don't have someone you trust to be an executor, talk about the use of a trust company. Talk about payments for the executor's time, which can be substantial. We talked about the executor's liability, how they can be sued by beneficiaries, and talked about something everyone should have, which is an estate directory, which is essentially an inventory of every single thing that you own to make the executor's life easy. So moving forward, we're going to take a bit of time off for the summer. We're going to be rolling some of the best of Retirement Straight Talk with Paul William for the summer. And then we're going to look at, we've done 34 of these, William and I. We've learned some things. We're going to try and improve on what we're doing. Come back around September 5th with some changes in the program that we think you're all going to really like. In the meantime, if you like what we're doing here, hey, rate us, subscribe us, and please pass us on. And by the way, if there's things you like us to talk about, hey, Paul, William, I'd like you guys to chat about this. Just send us an email at info@westendwealth.com. That's info@westendwealth.com. Hey, listen, everyone. Enjoy the summertime. Enjoy the warm weather. We don't get that much of it here in Canada.
Thanks, everyone. Have a great summer.
Bye-bye now.
This podcast was brought to you by West End Wealth Planning, an award-winning wealth planning practice catering to small and medium-sized business owners and to those looking to create a worry-free retirement for themselves and their families. To learn more, go to westendwealth.com. Don't forget to rate this podcast and subscribe to Retirement Straight Talk with Paul and William by going to Apple Podcasts, Spotify, or wherever you find your podcasts.